Welcome to the Aesthetic Advantage podcast, where we explore the business of beauty, wellness, and medical aesthetics. Each week, we bring you insights into treatments, innovations, and strategies shaping the industry. And if you're business focused, find out what makes this franchise worth owning. Let's get started.
Hi, everyone. This is Loni with Aesthetic Advantage Podcast. And today I'm very excited to invite Anthony Byrd from Benetrends Financial. And he is going to be speaking with us about franchise financing and basically just financing your business in general. So, Anthony, thank you so much for joining us.
Yeah, thank you for having me, Lonnie. Really excited to be here. We'll dive into all things financing and break down what could sometimes be a little bit of a ominous part of opening up a franchise.
Yes, absolutely. And even just financing your business. I remember 10 plus years ago, I did not know what was possible, even way back then. And I think I could have saved myself tens of thousands in taxes if I would have known the right way to do it. This will be very educational for everyone. So thank you so much.
Happy to be here.
All right, I am just going to jump right in to this. But before we get started, I want you to just tell them about your background. How did you get into financing at Benetrends, particularly? What is Benetrends all about, and what are they known for? And then what's your role there?
Absolutely. Yeah, excited to share our stories. Benetrends is coming up on our 45th anniversary of being in business. It was started and founded by a gentleman named Len Fisher. And Len is what we call the architect of the ROBS program, the ROBS, Rollover as Business Startup. And we're going to talk about that, of course, on today's podcast a little bit. But my role and how I got started in all of this financing was over a decade ago. I joined a small SBA placement firm called DCV Franchise Group. And DCV did not offer the ROBS program, but really specialized in SBA and bank financing. I came into that role in a sales capacity, grew myself over that time to being essentially the business development director overseeing that sales team. And then about 4 years ago, our CEO and chairman Rocco decided to come out to California where the company was based and took out our CEO, Reg, and myself to dinner and put the proposition out on the table to purchase DCV. And so when that came across, we all jumped at the opportunities. We had such a strong working relationship as Benetrends did SBA, but not to the level that DCV did. DCV didn't offer ROBS. And so we've come together to really form a financing powerhouse. And we're excited to say in 2025, we have broken every single company record in 45-year history just based on the amount of money that we were able to fund through SBA, ROBS, and individuals that we helped get into business.
That's very interesting. So, how much do you fund per year, for
Yeah.
example?
Yeah. So just in SBA alone, we financed almost $150 million this year.
Oh, wow,
And
that's
so that's
significant.
absolutely, it's over probably, I would put it between 250 to 300 different franchise opportunities, of course, close to 600 plus different loan opportunities. And what's really crazy about that is we lost 42 days with the government shutdown. So
Oh,
we could have maybe hit that 150 mark if we had those
okay.
42 days back, but we'll take it.
Okay, very interesting. All right, let's get into a business owner, entrepreneur, franchise candidate. So, when they come to you, what would you say is the biggest question they have, or maybe even a misunderstanding or something that you run into?
Yeah, absolutely. So really it comes down to helping folks to understand what they qualify for. The best thing that I can always equate it to is like buying a house. Can I afford that 4 bedroom house or the 5 bedroom house? And this is the same kind of process. People don't realize that it is similar but different. It's still at the same time, but going through and understanding your financing options and your buying power early on, you're not committing to anything. There's not a hard credit pull or inquiry, but it gives you an opportunity to know, okay, based on this, I know that I have this available to me, and this is the type of business that I can afford. And it just puts people at ease as far as knowing how they can pursue that. I tell folks very early on in the process, might even be before you know what opportunity you want to purchase, know what you can qualify for, know how you can move through this process, because that's really going to help to guide you through where you need to be able to go.
So, demystify that for us. What are the metrics or what are the things you look at to qualify someone for a certain amount of funds?
Yeah, there's really just a handful of things, really, to be honest. We're going to look always at credit. Now, we do a soft pull, nothing that's going to harm or damage or impact credit in any way. With SBA scoring systems, for example, we want to see a 690 plus credit score. Now, if somebody falls below 690, that's okay. We work with credit repair and a number of opportunities there to elevate folks' scores to where they need to be. They look at cash on hand for a few different reasons. One, down payment. Now, down payment with an SBA loan is always going to vary as far as where those percentages will lie, but there's no 100% financing with SBA. So it's coming to make sure we understand where somebody's cash position is. And we're also looking at their income to debt ratio, DTI. And so cash, if you're not working, can overshadow not having a job. But if you are working, that can bring certain strength to the project itself as a whole. So really trying to find a balance with the borrowers. And that's why going through this process initially, let us look at it in the eyes of how a lender would look at it to make sure that folks know comfortably how they can proceed forward.
Okay. And that would be their debt to income, their credit. What about where they're getting the down payment from? Do you look at that or help them understand how they can use those funds? I guess this is a good time to ask you just basically what are the types of financing that you offer?
Yeah, absolutely. So one is cash, right? We're always going to look at cash for down payment. Cash is the easiest form of down payment, but there's other alternatives to be able to look at that. And this is a great time to circle back to our other program, the ROBS, and how we got started at Benetrends. And again, that stands for Rollover as Business Startup. And the easiest way to be able to explain this is that if you have retirement funds, those retirement funds can be utilized tax and penalty free because you're purchasing a business. So there's no early 10% withdrawal penalty. There's no income tax on the funds that you take out. Now, I will say that about 90% of the time, these funds do have to be from a previous employer. The only time that we can use a current employer's retirement is if that employer allows for an in-service rollover. Now, that's not necessarily something that we commonly see, but is it out there? Absolutely. But those ROBS funds can be used really in two ways. One, to be able to, if you have enough in retirement, you can pay for the business outright. And this is not a loan. There's no interest involved. It's a way to access capital that essentially is in the stock market through your retirement plan, and instead you're coming back to invest it in your business. Or if you don't have enough in retirement to pay for the business outright, you can actually combine it with an SBA loan. So this is a lot of time if maybe somebody doesn't have the cash necessary to cover for the down payment, where we'll combo the ROBS program and the SBA, because in utilizing that ROBS transaction, that can now cover your down payment necessary to move forward in SBA. So really a great alternative solution there to come up with cash that might not just be readily available in checking or savings. And then
Okay.
a third option would be a HELOC, a home equity line of credit. And a home equity line of credit is the only accepted form of borrowed funds that a lender will allow you to use to cover the down payment on an SBA loan. They won't allow for personal loans to be used for that, but a HELOC, because you're essentially borrowing from yourself, can be used in combination with the SBA or ROBS, SBA, and HELOC altogether, the trifecta. So different ways to do this, and that comes through education here at Benetrends.
Okay. So, just for the listeners, for a Gloss House Spa Center franchise, there's a range of investment opportunities, but for the optimized model that's a full center spa center, then the franchise cost can be from 611,000 up to 950,000. So just with that level of financing and investment level in mind, Anthony, then how would you say is the most common way that you see candidates are going to finance that type of investment?
Yeah, primarily I'm going to say SBA with maybe a combination of the ROBS to help cover down payment. It's not to say that it doesn't happen out there, but let's just call it 800 to 900,000 for investment. Very rarely do we see that much in a 401k to be able to just come and pay for the business outright. And sometimes folks won't have the cash necessary, but to use that ROBS and SBA together, that's really going to help accelerate to how we get over the finish line and helping folks be able to achieve the investment here.
Okay. And are there different requirements to qualify for a ROBS loan versus an SBA loan?
Yeah, the ROBS is really, again, we're going to fall back on that kind of 90% criteria as far as making sure it's from a previous employer. Again, maybe somebody's been at their job for 20 plus years and that's the only job they've ever had. If the company doesn't allow for an in-service rollover, it does make it impossible for us to do the ROBs unless, again, it's from a previous employer. Then we have no issues as far as that goes. And then the other kind of access that we can't utilize for a ROBs is a Roth. Now, a Roth IRA is post-tax dollars, so you can withdraw the Roth because you've already paid the taxes on it, but it won't be allowable for the ROBS transaction. So there's a few little rules that are thrown in there, but in most instances, folks have switched from one job to the other. And even if they've moved their retirement funds from their old job to their new job, we can still access whatever funds they moved over from their old position, even if they moved it over into their retirement plan at their new employer. So it's not lost by doing that.
Can see that there's a lot of moving parts here and a lot of different options. So, how do you help someone decide what's the best way to finance their business?
Yeah, we're very big and believe in education. And so when we have even the very first initial call with an individual looking to pursue business ownership, we're very transparent in what these options that are out there, taking the time to come in and explain what these nuances are, helping folks to feel comfortable. Even for the SBA, our pre-approval process isn't free. No obligation and no hard credit pull, right? It doesn't get much easier than that in helping folks to do that. Now, we won't take somebody through that process until we've had a chance to speak with them so they know what that will look like as they come into it. But we're very handholding in our obligation here because really about 80% of our folks that we work with, and that's a couple of thousand people a year, have never done this before. It can be scary. There's a lot of things you don't know about that can pop up, but that's why we exist to help folks guide through this process from start to finish.
Okay. So, when a person first contacts you, perhaps I refer them to you or they contact you via the website, then what can they expect for the process to
Yeah,
get
so
to know
it's
you?
Yeah, so it's really very simple. It's we send over a calendar link. They're able to go in and select a time on calendar. The next day is always available, of course, minus the weekend. But then being able to take them through that initial 30, 45-minute call through the process of understanding what that's going to look like for them to appreciate what those financing options that can be available to them, taking them through those initial steps in education. And for example, if they do want to understand their SBA pre-approval, then we'll send them out a secure document portal. And once we get the information back in, we don't leave folks hanging. It's only a couple business days for us to turn it around and provide, hey, this is what you qualify for. Or if you don't qualify, and this is something unique to us, is that we provide individuals with a roadmap. We never want to leave somebody behind that could otherwise be a business owner. So if somebody does not qualify for whatever reason, we don't just send a decline letter. We give them the exact steps necessary in order to qualify so that they know what they need to do to be able to achieve business ownership.
I think one thing that might help is if you give us an example of, let's say, someone that has a previous employer 401k of $350,000 and they want to use part of it and or get an SBA loan for a purchase of a $900,000 franchise. Then how would you go about deciding where do they get the down payment? What are the interest rates? What's the best scenario for them to put that together in a financing package?
Absolutely. So that is really a dream individual there as far as we'll have options. And when we look at that kind of opportunity at 900,000, let's call it, that means that at 20%, which we'll typically see as a down payment on a startup franchise opportunity, that means we need 180,000 to go as a down payment towards the SBA loan. Now, that 180,000 is not a check that's written to the bank. That's money spent towards the business. This is really unique about SBA, right? You go out and you buy a house, you buy a car, you write a check for a down payment. With this, it's money that you bank wants to see you go out and put your skin in the game. So if you go out there and write a check for the franchise fee, that counts towards your down payment. If you pay to get a corporation set up, if you fly out to meet the franchise in person, any and all money that you spend towards this project counts towards that down payment. But where that ROBS can really come into play, if you have $350,000 in ROBS, you don't need to roll over all 350,000. You can roll over just enough to cover that 180,000 for down payment and not have that 180,000 come out of your checking or savings account. It's really providing you liquidity. And when you're starting a business, the more cash, the better that you have to go through those initial periods of hey, we're launching a business. We need to spend this, we need to spend that, right? And having access to that. And let's say you need more money later on, you can even come back and roll over the funds later that you didn't roll over initially. So there's opportunities to do that too.
Hey, that's very interesting. Sounds like a great way to go about financing the business. Can you tell us about some of the, I don't know, legal or compliance things that you need to do for a Rob's
Absolutely.
financing option?
Absolutely. So the biggest thing there is the type of corporation that we have to utilize. So you'll see three standard corporations in opening up a business: an LLC, an S Corp, and a C Corp. A Rob's requirement per the IRS is that we have to utilize a C Corp in order to be able to do the Rob's. And the reason for that is that the C Corp allows for a stock transaction. And just like you might invest your retirement account now, let's say in stock in Apple, instead you're going to invest in stock in your own business. And so in order to do that, there's a stock issuance that happens with the C Corp. So we create the C Corporation, we set up the new retirement plan, and issue the stock so that those retirement funds can issue into your corporate checking account. Now, you don't have to stay a C Corp forever. You can eventually go back and put your retirement money that you took out back into the C Corp. There's no requirement to do that. It's not a loan. There's no interest rate. But of course, folks usually want to come back and rebuild the retirement. And so when you do that, you can actually then roll your C Corp into an S Corp. And that's a much later on exit strategy to move through that. But Benetrends has a phenomenal back-end support team that helps folks keep their C Corp compliant. We even offer audit protection and support. And audits are very rare, but anytime we've ever seen one, everything has found completely compliant. We've never had an audit go bad for anything that we've done in setting up the retirement rollover, and that's over 40 years in business.
So are there getting started fees for Rob's or annual fees or anything like that?
Yeah, so the initial fee to start the ROBS is $4,995. Now we do offer a 10% discount to our veterans. But that being said, that includes the incorporation of your C Corp and filing fees, the setup of the new retirement plan, as well as the moving of the monies. Now, because this is still a retirement plan, we are managing that retirement plan here at Benetrends through the C Corp. And so, as part of that, we do have a fee of $158 a month that keeps the C Corp in compliance. We help you with the year-end paperwork that needs to be filed for the C Corp. Now, we don't file the taxes ourselves, but we prepare the C Corp documents to go to your CPA for your taxes to be filed. So all of that support is there, as well as setting you up on exit strategies, helping you invest into additional businesses. It's really a partnership in how we move forward if we're doing the ROBs. And same applies to the SBA. We take you through every step as far as the way there with our SBA team, but just know going into it, you're never alone.
And thank you. And let's switch over to SBA now. So one thing that I didn't realize is I thought an SBA is an SBA is an SBA anywhere you get it. But you had mentioned to me off this call that different lenders have different requirements and different loan products, I guess, for doing the SBA. Can you explain that a little bit and what lenders you work with and what to expect from different types of lenders?
Absolutely. So yes, SBA is a kind of blanket program, if you will. And what you'll mostly utilize is what's called the SBA 7A loan. There's probably close to 20 different SBA products out there. But when starting a business, SBA 7A is what you're most commonly going to see. Now, the federal government, being a government-backed program, puts forward certain stipulations, like if you're leasing a location, the loan cannot exceed 10 years. But banks could charge a prepayment penalty. We choose to work with banks who don't charge a prepayment penalty because that is there to make sure that if somebody wants to come in and pay that loan off early, they absolutely can and not incur fees or damages for that. SBA is not 100% financing. That's a rule. Banks require or SBA requires a minimum 10% down. But banks need to decide their own risk there. So where average down payments will see between 10 to 20% down, and that's going to vary per lender, as well as the interest rate. The interest rate is federally regulated at a cap of about prime plus 6. Now, I will never see, or nor have I ever seen, an interest rate that high. Most lenders are going to come in at a maximum or prime plus 2.75 to 3, which is going to be that spread over prime. Now, we had several rate drops last year, And so, again, we can work with different lenders to find the best terms and conditions possible. Where we're going to see those variances, making sure we find that bank with no prepayment penalty. Which bank is going to offer the best down payment? Which bank is going to offer the best interest rate? And which bank will offer the longest interest only period? And an interest only period is as you're getting the business started, a bank is not going to hit you with a full loan payment of principal and interest due. They're going to give you some time to be able to ramp up into the business where your payments are very minimal, only paying interest to get started. So a lot of different criteria there as far as all of this and what we see. But again, coming back to where we come into play is established lender relationships that we work on your bench, on your team to come in and see which banks are going to follow as far as offering those best terms that fall within the range of SBA classifications and qualifications.
What are you seeing for interest rates right now from the lenders, as well as what's a typical interest only payment period?
Yeah, absolutely. So interest rates, if we look at that prime plus, I would call it 2 to 2.75 is going to put us around 8.75 to 9.5%, somewhere in that kind of range there. Now, with the interest rate, I will say, folks sometimes will go out there and say, oh, yeah, I can get an interest rate at 7% on an SBA loan, very similar to a mortgage rate. That still rule still applies, but that means you're buying the building to go with your business. But in most cases, we're going to be leasing. And so, in that regard, that's where we'll fall in that interest rate. And then standard interest only period at minimum is 3 months. And we've seen all the way up to 12 months. But on an average, you'll see a 6 to 9 month window as far as that interest only period goes.
One thing that I thought was interesting process is when you get an SBA loan, as I did years ago, then they have probably different lenders have different ways of managing the loan disbursements. But it was very interesting that they give you a certain amount only when you've built out the facility and can show them, oh, the drywall's in. Okay, now the plumbing is in, and now we've built out the finishes, and they give you a draw for your contractor, and they actually come out and look at the facility and keep track of all the work that's being done as they disperse the funds. Do different lenders handle that process differently? Do you help with that, or what can the business owner expect?
Yeah, so banks definitely have different policies and procedures as far as that goes. I will tell you that SBA loans do run on a distribution format. So, they'll issue funds when you need them, right? If the general contractor needs to be paid, if the architect needs to be paid, if the equipment folks that are selling the equipment need to be paid, the bank pays all that out as needed when going through that process. And different banks have different criteria as far as that goes. Some banks will hire an outside management company to do that if you're not geographically located. Even if you're not geographically located, I have certain banks that'll fly individuals out to go do inspections. Or if they're come there, it's really per bank, per project, and what's going to be there. But just know that on our end, we're managing the closers, we're managing the expectations, we're managing to make sure that no funds or payments are delayed in any way and that everybody's getting paid on time because it is a process. It's growing through this and making sure that folks get the money when they need to so that they can come in and not have any delays in getting their business up and running.
Okay, I didn't realize. So you help with that process as well?
Right. And working hand in hand with the closer, right? We're helping to collect the invoices. We're making sure the bank is staying on task. Really, again, managing this process from start to finish.
Who are some of the lenders that you work with?
So we classify only with banks that are PLP lenders, and that stands for Preferred Lending Partners with the SBA. And it's so important that we work with these banks that carry that PLP designation because if a bank is not a PLP, then they have to submit your SBA loan to the federal government for approval instead of having direct access to the SBA system to approve the loan in-house. This is a huge time-saving opportunity as far as not waiting for that to be able to happen. And the banks that we work with work on a national scale. Even if a bank might not have a branch, we work with SBA lenders that are called fintech lenders, where they're essentially online bank marketplaces, but they fund nationwide and are PLP, but you would never even see a branch for them or how they would exist. So it's really unique in the fold of the lenders that we bring in, but we have such a large swath of lenders to be able to work with because every borrower is different, every project is different, every location is different. So we're not going to take somebody to 60 different banks. We'll go to 3 to 5 at the very most in making that determination in which banks are going to best suit while offering the best terms and conditions possible.
Can you give us an idea of the process and milestones that happen from application to dispersing money? So let's say for a franchise business. So let's say someone comes to you, they want to buy a franchise business. They do the application with you. And then you're going through the process of helping them decide SBA in combination with ROBS or ROBS only or SBA only and the different scenarios. Let's say they end up with an SBA loan for the project in one way or another. And then what should be their milestones as far as signing up for the franchise, signing their lease, hiring their contractor, getting the funds? Which part comes first or second?
Yeah, absolutely. So the pre-approval process will always come first. You never want to sign on for a franchise without knowing that you have the funding lined up, and whether that be through SBA or knowing that you can access your retirement funds, that's that biggest milestone right there. So that both the
One question,
uh,
one question about that before you go on. Is this the same as like a mortgage pre-approval? And do you lock in a rate and get a letter and all of this kind of thing?
you definitely get a letter, but we're not locking in the rate yet because the SBA rates can adjust on a quarterly basis depending on if the Federal Reserve changes the rate or not. We won't know the specific rate until we've had a chance to go out to the banks. And so what we're putting together is an SBA pre-approval letter that outlines what are terms that an SBA loan can be, but knowing that you qualify for SBA. We know, as our team carries decades of experience in exactly what our banks are looking for and have been trained by these banks to be able to put this together and issue that letter. And so doing this up front and knowing that before you sign on with the franchise, right? The biggest question we get all the time is, hey, I'm pre-approved. Great. Now what do I do? But we'll go back and say, okay, now's the time for you to make the decision. Hey, if you are going to move forward with the franchise, now's the time to sign and move through that process. But the biggest thing with that is that you want to start the SBA process, meaning start the actual loan process of having us go out there and go to the banks the same time you sign the franchise agreement. It's so imperative that we get started before you find a location to be able to bring a bank on board, know the terms and conditions. That way, once you do find a location, the bank is sitting there with their checkbook open. They're ready to start issuing funds. The last thing we ever want to do is burn up anybody's free rent or delay things. And so we set the timelines and milestones as we go through the process and knowing what that looks like. But again, before starting any of it, it's getting that pre-approval or knowing that you're going to use ROBS or knowing that you're going to use both, signing on with the franchise, and then allowing all of us to launch together at the same time.
So you would get the pre-approval, sign on with the franchise, remit your franchise fees, and
Mhm.
commit to the business. Then you would look for your lease location and negotiate your lease terms and landlord TI, tenant improvement dollars, and get all of that going. And then once you've settled on a location, then you get the bank that's lending to approve it, as well as the franchisor. And then you finally sign the lease. Then you hire the general contractors, and then you get the disbursement of funds.
Because the bank
There.
needs to know who and what they're paying. Very inaccurate point there. But again, starting that SBA process as far as going out to the banks, the same time that franchise agreement is signed so that everybody can essentially launch together and meet all of those timelines and expectations.
Thank you. Which it seems very common sense and logical, but if you've never been through it before, it can be confusing about which milestone comes first or second, and so on. So thank
Yeah,
you for clarifying.
absolutely.
What about people that might say, I've heard I guess probably it's more common now, but 11 years ago or more when I was looking into ROBS and I researched it on Google, it was like, oh, this might be risky for one reason or another. And I have no idea why it was thought to be risky for tax purposes or something. But what would you say to that? And where does that come from? And what's the situation now?
Yeah, absolutely. So the thing about ROBS is it's tried and true. It's an over 40-year product. It's something that folks are able
Mhm.
to utilize. And really the only risk that's there as far as doing the ROBS transaction is if for whatever reason the business were to shut down, those retirement funds are gone at that point. It would be what I equate to maybe investing in risky stock. If you invest in something that might be a new up and comer or going into the stock market or something like that, you risk losing those retirement funds. That's the same case here. Even if the business does shut down for whatever reason, you're not required to pay those retirement funds back. They are just considered lost funds at that point. So that's really the only risk involved. But as far as the process itself, the legality around it and how to do it, carries no risk as long as you have an administrator like Benetrends take you through that process.
Thank you for clarifying. And one thing I'm interested in, you probably talk to a lot of potential business owners on a day to day or month to month basis. And what would you say is their main reason for not going through with a business purchase or a franchise commitment? Do they get scared? Are they worried about taking action? Do they not have the qualifications? Is it all of the above? Or what would you say is the trend these days or last year or so?
Yeah, I mean, for us, especially for someone who's been doing this as long as I have, things have shifted. It was before pre-pandemic, it was more, hey, I heard my friends told me not to do this, or my parents told me not to do this, or family did this, or family did that. But coming out of the pandemic and the amount of folks that went through layoffs or job loss or whatever that might be, we've seen such a surge of folks looking to go into something like franchising so that they can come hold and take a hold of their own life and owning businesses and being able to move forward. It's just record numbers across the franchising. The International Franchise Association just released their franchise economic impact report, and the numbers are just staggering of people going into business and moving through. And so while there's still individuals out there that might hear that this is a bad idea or just think as McDonald's as a franchise or whatever that might be, I think that'll always exist a little bit. But coming into the time that we are in today, we're seeing folks really want to go out there, become that entrepreneur, be able to want to do that, and aren't listening as much to the outside influences that might have pushed somebody away to that before. Again, will that always be there? I'm sure, but we're starting to see a lot less of that, and a lot of people will take the leap into entrepreneurship.
Yes, I think people do want to have control of their own future and not be so reliant on big corporate companies that also are going through a lot of change with AI and everything. And one thing that's interesting that I had heard on a podcast, I wish I could cite it right now, but it was something about 100 years ago, more than 80% of the population owned their own business. Like it was uncommon to work for corporate in the past. And then it got to be more now it seems to be people are more and more interested in controlling their own future. So I think that we covered all the bases. Are there any other things that I didn't ask you that you think the listeners would want to know about? And also, of course, how can they get in touch with you?
Yeah. Yeah, I would say we're so happy to speak to people and guide them through this process and go through this. And again, just allow folks to be able to help you. That's our biggest thing, right? Whether it be us or anybody else. Trying to do this alone is where you really hear those horror stories and people not succeed and go through that. So if we can support you, even if you don't end up working with us, we're happy to be able to do that and just take the help when it's out there. So that's a big piece of advice that we have. And you can always reach us at benetrends.com. You can reach me at abyrd, A-B-Y-R-D at benetrends.com. We're always here to answer questions, whether it be brief, long, or whatever it might be, and help guide folks through the right path.
One other thing is you had mentioned before that you provide support or assistance with helping people do a business case. What's involved with that?
Yeah, so a business plan. So Benetrends is the only funding company out there that actually has an in-house business plan team. Our business plan team has written plans now for well over 20 years. We subscribe to services to be able to pull data, metrics, demographics, everything that we need to do as SBA does require a business plan to be put together. And so the business plan that we offer and put out there meets all SBA requirements and stipulations, We put together 3 years of financial projections, market analysis, break even, sourcing use of funds, and a full demographics analysis for the geographic location of the business. So this is something that can help expedite an SBA deal as well as your project. Having a team like ours to be able to put that together, that's not a requirement to work with us. It's just an a la carte option that we have that people can add on to have us take folks through that process if they so choose. So to be able to really do that, because not only is that a tool for the loan, but it's a tool for your business going into the future and knowing what those metrics are that you need to be able to succeed.
Well, I think that's a great resource. As a franchisor, of course, we also help people with a business plan, but I think just more eyes on it and another checkpoint from someone else looking at it is always a great idea. So
Absolutely.
that's a great feature you have.
Absolutely. Thank you. I mean, we can even do just the financial projections if they don't need the whole business plan. So we can even break it out and even the more a la carte out there. So
It's a great option. Okay. Thank you so much.
thank you. I appreciate you having me.
Thank you so much for joining us. And we really enjoyed having you on the podcast.
Thanks for having me, Lonnie. I appreciate it.
Thank you for joining us on the Aesthetic Advantage podcast by Gloss House. If you'd like to learn more about us, our treatments, memberships, franchise opportunities, visit glosshouse.com. We'd love it if you would share this show with anyone passionate about aesthetics and wellness as we are. Until next time, stay inspired, stay beautiful.